Hello everyone. In today's video, I want to show you what buying real estate in the Dominican Republic looks like in numbers. How much money do you need to purchase property here? What financing options are available? And what kind of income from short-term rentals can property owners expect during the times when they use the property themselves? So, you've started thinking about buying real estate in the Dominican Republic. Where do you begin, and how much money will you need for this? Take a look at all the projects available for sale. You can view them on our web portal, www.buycaribbeanhome.com. If this is your first time on the portal, to have full access to the site and see prices, floor plans, deposit terms, and so on, you will need to register and create your own password. Unregistered users cannot see this information. They only see basic information on the site. Next, I recommend scheduling an appointment. You can do this by clicking the Schedule a Consultation or Book Appointment button, depending on whether you are using the Russian or English version of the website. You can choose the day and time that are convenient for you, and you can also select an online appointment, an appointment at our office in Richmond Hill, or a phone call, and I will explain in detail all the nuances in the process of purchasing. We will also select a property that best fits your budget and preferences. How much money will you need for all of this, and what are the timelines? After choosing an apartment and receiving confirmation from the developer, you have 24 hours to make the reservation payment. This is usually $5,000, and it is included in the price of the apartment. Next, we send all your documents to the legal firm Crescent Law, which represents our client's interests in the Dominican Republic. The cost of full transaction support, including preparation and review of the pre-construction contract, registration with the registration chamber, and also the transfer of property ownership upon completion of construction, is 1.5% of the purchase amount. When you formally sign a contract with the legal firm, you will then pay 60% of that particular 1.5% fee. Preparation and review of the contract takes about 3 weeks. When the contract is ready, the lawyer will send it to you by email. You need to print it out, sign it, and send it back to the legal firm by courier. All of this can be done at our office. Next, the contract is signed by the developer. The contract is then registered at the registration office, and with that, the transaction is complete. The legal firm can send the original official contract directly to your designated home address by a reliable courier service, or they can securely keep it at their professional office, while you will promptly receive a comprehensive copy of the contract via email. Once construction is completed, the pre-construction contract will be needed to transfer ownership of the property to you. After the transaction is complete, you need to transfer the first payment to the developer within a week. This is usually 20 or 25% of the purchase price minus the $5,000 you paid during the reservation. The standard deposit for pre-construction deals in the Dominican Republic today is 20 or 25% after signing the contract, and 35 to 45% of the purchase price paid over the entire construction period. These payments are tied to the stages of construction and can be adjusted to a schedule that is convenient for you. Some people prefer to make small payments but more frequently, while others find it more convenient to make a large payment, say, once every 6 months. The most common arrangement is quarterly payments. That means you make 4 payments per year. Currently, apartment prices on the East Coast vary from $150,000 to $600,000, depending on the size and the specific project. Accordingly, if you are buying an apartment for $150,000, all the payments shown on this slide are half as much. And if you are buying an apartment or villa for $600,000, then the payments are exactly twice as much. Now, regarding financing, a mortgage loan for an apartment can be arranged 3 months before the completion of construction, and it will be issued on the day the ownership is transferred to you. Option 1. This is when you get a loan for the remaining 40% that you need to pay the developer upon transfer of ownership. And option 2 is when you take out 70% of the appraised value of the apartment at the time construction is completed. Usually, the value of the apartment at the time construction is finished is about 15 to 20% higher than what you paid for it at the foundation stage. So it turns out that you can get a loan for 80% of the apartment's purchase price. However, the cost of borrowing in the Dominican Republic is about 2% higher than in Canada and the US. That's why most of our clients typically pay off their Dominican property in full, and if needed, they can readily get a line of credit or increase the amount of their existing mortgage on their primary residence in either the United States or Canada. And finally, what kind of significant income can you realistically expect from short-term rentals when you're not personally personally using the apartment yourself. Let's say you plan to use the apartment for your own personal use for about a month each and every year. Here are two real examples of apartments in the same areas where we are currently selling new developments. And this is a very conservative estimate calculated based on older complexes that were built 4 or 5 years ago. Today, much more comfortable complexes are being built here by major developers with world-renowned names. And of course, the rent there will be higher. But let's use figures from statistics that have already been verified as of today. The first example is the most luxurious place in the Dominican Republic, Punta Cana. In my videos, I have already repeatedly talked in detail about this area, where today you can buy a 2-bedroom apartment for about $340,000. And such an apartment will bring you from short-term rentals managed entirely by the complex's management, so you don't have to do anything yourself, about $50,000 a year after expenses, taking into account a 5% annual appreciation of the apartment over a 7-year investment cycle, 2 years of construction and 5 years of renting. You earn more than $500,000. And that's if the property appreciates by only 5% per year, which is very unlikely. This slide shows how property values in the Dominican Republic have increased in percentage terms over the past 8 years, and what experts are forecasting for the next 4 years. As you can see, the forecast is for prices to rise by 10 to 13% annually. And of course, if you take a 10% annual increase, the total return at the end of the 7-year investment cycle will be much higher. And here is a second example with a more affordable apartment in the Dominicus Bayahibe area, where today you can buy a 2-bedroom apartment in a luxury project for $200,000. The annual net rental income here is lower at $20,000, and the total passive income from rent and price appreciation over the 7-year investment cycle will amount to $220,000. And of course, when you buy an apartment, in addition to a very profitable investment, you get a place where it's a pleasure to vacation with the whole family. Enjoy your holidays in comfort while earning money at the same time. See you next time on the channel.